Good evening and welcome back to Smart Investment Long Videos. Today we are diving deep into KEC's international latest financial strategic moves and how it's shaping up against its peers in EPC sector. If you are considering investing in infrastructure, then this is the company you need to know about. KEC International has shown the robust growth in Q3 financial year 25. Revenue rupees 5349 crore, a 7% year-over-year increase. EBITDA rupees 374 crore, up 22% year-over-year with margins improving to 7%. Profit after tax rupees 130 crore, a 34% year-over-year rise. Earnings per share rupees 4.9, reflecting a 28.9% year-over-year growth. For the 9 months ending December 2024, revenue rupees 14975 crore, a 9% year-over-year growth. EBITDA rupees 989 crore, up 20% year-over-year. PAT rupees 303 crore, marking a 55% year-over-year increase. This figure indicates KEC's strong operational efficiency and profitability. Moving forward, now let's take a look on strategic development. KEC is not growing financially but also strategically. The first is cable business transfer. Effective from January 1st, 2025, KEC transferred its cable business to KEC Asian Cables Limited, aiming to unlock growth opportunities and enhance business efficiency. The second is aluminum conductor plant. The first phase at Vadodara is commissioned and the final phase was expected by March 2025. And the third is new cables facility. Production of elastomeric and electromeric cables set to begin in Q4 financial year 25. These moves are set to bolster KEC positions in EPC sector. Moving forward, now let's take a look on key performance indicators. The first is order intake. Over 22,000 crore YTD, a 70% year-over-year growth. Order book rupees 37440 crore with an additional L1 position of over rupees 4,000 crore. Net debt reduced by rupees 471 crore year-over-year, standing at rupees 5574 crore as of December 31st, 2024. Net working capital days slight increase to 134 days from 129 days year-over-year. KEC diversified business segment has shown varied performance. The first is transmission and distribution. Q3 revenue at rupees 3175 crore, a 17% year-over-year growth. Notable orders from Power Grid Corporation of India and international markets like Saudi Arabia and UAE. The second is civil infrastructure. Q3 revenue at rupees 1100 crore. Challenges include delay execution in water projects due to slow client pay. The third is transportation. Q3 revenue at rupees 456 crore, a 30% year-over-year decline, primarily due to project delay. The fourth is renewable. Revenue grew by 52% year-over-year to 238 crore. And the fifth is oil and gas. Witnessed a 59% year-over-year decline in revenue. If we compare KECs with its peers like L&T, Sterlite Powers, and Kalpataru Power Transmission, KEC stands out with its diversified portfolio in transmission and distribution, civil, railways, and renewables, coupled with a strong international presence in over 110 countries. Moving forward, company have received orders in January 2025, like secured T&D orders worth rupees 1445 crore in India, backed orders worth rupees 1136 crore across various businesses including civil and cables, and also won international T&D orders totaling rupees 1097 crore. These orders reinforce KEC's robust order book and future revenue visibility. Looking ahead, KEC targets financial year 25 revenue growth by 12 to 14%, financial year 26 revenue growth 15% CAGR, EBITDA margin aiming for 9 to 10% by financial year 26, order inflow targeting over 25,000 crore in financial year 26. With strong order book, strategic expansion, and a focus on operational efficiency, KEC is well positioned for a sustained growth. If you are considering investing in this space, KEC deserves a closer look. Please like, share, and subscribe for more insightful videos. Thank you for watching.